Welcome back to part 6 of our chapter 2 video series. We're going to be quickly covering 3 different credits, one for energy, another for adoption, and a third for a health insurance premium tax credit under the Affordable Care Act. All of these credits are the so-called non-refundable type that we're kind of grouping here in our schedule number 3. So the energy credit is here in line 5, residential energy credit calculated on form 5695. And it's kind of divided up into two parts. Here in part one is the big one, the one that's popular in Hawaii, where we have those photovoltaic systems, those panels on people's roofs. And that would be here in line one, qualified solar electric property. So the total installation cost would be put here. Another common one would be solar water heating, line number 2. I don't see any wind turbines on people's homes or hooked up to a volcano here, but you total up all the costs and you can see the credit is a generous 30%. There's no dollar limit here. But this is for the tax year 2019. But the rate for the year 2020 has gone down, I believe by 4%, okay, down to 26%. And for 2021 and 2022, I believe it's gone down another 4%. That's 22%. Things can always change, depends, I guess, which party, which initiative is being promoted by the government. Hawaii has a comparable amount also for energy credits. I believe there's a dollar cap though, a dollar maximum. So here would be the total amount that you can claim here. And if you cannot use it, remember this is non-refundable. It is possible to carry it over to future years, so you don't waste it like the other non-refundable credits we've seen. On the back side of this form is another category of energy credit called non-energy property credit. And it's not as generous, it's kind of small. There's a maximum $500 over a taxpayer's lifetime you can claim. And it's divided up into two parts. One part up here deals basically with insulation, roofing, doors. I think this form had changed. These credits may have been set to expire at the end of 2019, but after the 2019 year was over, I think they brought it back. So I believe this form was adjusted. The common one maybe in Hawaii would be windows that have some kind of heat insulation. And there's a max of 2,000 and you take 10% of that. And there's another group basically conserving heat. That's these over here. Not too common, of course, in Hawaii. We're trying to keep cool, not keep warm. Okay. Again, the total down here, max of 500. Both the big credit in the front, that's again the solar, the PV, and that $500 amount, all combined here in line 5 of Schedule 3. Let's take a look at the next credit. And this can be tens of thousands of dollars. I've actually seen a taxpayer adopt a couple kids during the year, and it was huge costs. And you can see here for each kid a maximum credit of 14,000 to reimburse them for the cost they incurred during the year. Not common, but just be aware if you're going to be adopting kids and you're going to be incurring costs, maybe the government will help subsidize that for you. The last credit we'll talk about here in this video is called the premium tax credit. Again, not too common in Hawaii. The main reason why is that most people get their health insurance through their employer. Here in Hawaii, if you work more than, I believe, 20 hours per week, it's required that the employer help pay or subsidize your health insurance. And if that's so, then you're not going to get this credit. Also, other people, retired people, get their health insurance through Medicare, and low-income people get their insurance through Medicaid, or children may be under the CHIP program. So only if you don't get your insurance elsewhere, then when you can buy insurance through something called the marketplace. And at the end of the year, you're going to get this form here called 1095A. There's different versions of this form. There's a B and C, but it's the A version coming from the health insurance marketplace that will help you calculate how much leftover credit you can claim on your return. Possibly most of the credit is going to be used during the year to help subsidize the cost of the health insurance. And anything left over will show up as a credit here um, on the tax return. Now, it's possible that you use too much of the credit during the year, so you're going to have to pay back the excess um, uh, overused credit with the tax return. What's not here anymore in 2019 is any penalty for not having health insurance. People were kind of pushed to buy health insurance if they didn't have any because they're going to be penalized. But that stopped after 2018. So this type of credit probably is going to be declining in usage over the years and definitely not popular in Hawaii because people get their health insurance through other means. Let me stop here, and when we continue into the next video, we'll talk about possibly more common refundable type credits.